I know we've got lots to say about the Fed, so let's do that, shall we, Mark? And then we'll come back perhaps to the BOJ. In terms of what the Fed has been saying, I mean, what stood out to you as overdone in terms of reaction to the Fed?
I think it shows the positioning that was out there because, look, we expected the Fed to be hawkish, and sure, they out-hawked our hawkish expectations, but not so dramatically. I think the only 2 cuts priced for next year, many people were speculating on an idea yesterday. I think maybe the dissenter was interesting because it shows there's a bit more controversial here. And ultimately, I think the scale of the reaction in the stock market reflects the fact that people are positioned very long. There is great complacency out there. We know that valuations are extremely stretched, and you've suddenly been given a reason to sell and take profit at this time of year. Why not just lock in those wonderful profits this year, relax for a couple of weeks, and re-engage in the new year? And so I think it makes sense that we saw such a large reaction. And on rates, I still am not convinced the Fed cuts next year. I think there's a lot of uncertainty. I just don't know which way it's going to go, but I think we need more clarity on what Trump delivers in terms of policy and how that impacts before we can have any certainty which way the Fed goes. And I don't think there should be any conviction, though, that a cut is the next move from the Fed.
So, Mark, does that mean that if the big event was yesterday, that tomorrow's PCE and UMISH data is going to be a non-event? What do you think?
I think right now we're going to be trading positions and trading books and trading P&L. So it's not that it's a complete non-event, but yes, I don't think it's the big driver. I think right now it is going to be the market is going to be the news. If we go to the US session today and we see more weakness, that is going to encourage more selling. It's not the time of year where you get dip buyers. It's not the time of the year where the retail audience wants to engage. They're using their money elsewhere. They're on holiday. They're with family. They're distracted. They're spending on presents. It's not the time where a slide gets halted. So I don't even think we need much news. I think the price action is the biggest fundamental right now at this time of year.
Let's talk quickly about what's happening with Japan and figure out what is going on there. The more that Ueda sounds dovish, the bigger the move in the yen, the bigger the problem he has, and ultimately that might force a hike. Is that what we're looking at here? Is that the setup?
We were joking there that during the press conference, he was trying to, during the press conference, make the conditions where he had to hike by the end of the press conference by weakening the yen so much that he causes imported inflation. I mean, we're only partially in jest, but we were asking who hikes first next year, is it the Fed or the BOJ? Again, partially facetious, but it really feels like the BOJ have stumbled here after kind of prepping themselves to kind of really engage this cycle. And they're not going to be hiking in January. They kind of pretty much said that. It's going to be pushed back. I don't know if they're going to get a hike in the first quarter. And again, then, for the Bank of Japan, we have to see what happens out of the US. We have to see what kind of trade tariffs actually get imposed. We have to see what policies come from that new administration. So there should be no conviction as well with the BOJ about what the next move is or when it comes.